Hello, hello, hello. Sorry for the slightly early start. People watching it on raw recording. Something popped up that I have to take care of, so this is going to be a shorter than normal live stream, but didn't want to cancel it. Again, that's why there'll be fewer people in here. But good morning, Patrick. We'll have other people funnel in, and then they can rewatch it on YouTube on replay. So this week we have ISM numbers today and Wednesday. ISM numbers. Hey, Chris. So keep an eye out for those. The manufacturing ISMs comes out at 9. Then we had a fair amount of Fed speak today. So ISM numbers and Fed speak. We got more Fed speak tomorrow. Wednesday, we have the ISM services numbers. So that's important. Thursday, again, unemployment. Thursday, more Fed speak. Lots of Fed speak week. And then Friday, we have the non-farm payroll numbers. So, not an overly busy week in terms of reports, but ISM numbers are important, especially Wednesdays with the services, and unemployment Fridays numbers are important, and a ton of Fed speak. So that's where we sit. Good morning, Jacob. Tesla down. Did they just report their earnings? Or yep, they just. I mean, their earnings, their delivery numbers. Ooh, 435,000. So that was a pretty big miss. So that's dropping. Nvidia got added to some Goldman list. Like this is a point to chase after Nvidia, but that's what they did. Other than that, it was sort of a mixed market. Remember, first day of trading for October. Again, very mixed market. Healthcare and basic materials are the biggest down. Technology and energy are up. Fed Watch tool. Fed Watch tool, these are climbing a bit for one more rate hike, but nothing above 50%, so nothing baked in yet, even close to being baked in, and it's extended out for the first cut until after June again. Fear and greed in extreme fear still based off of the close on Friday. And it was a weak market. It was early stronger, and then it turned around. A lot of stuff is shifting in the market. We're going to have to see if that picks up mid-month. I generally am on alert for major market moves to the downside up through about the middle of October. And then we have to see if we get some of these year ends starting to kick in after that. Hey, Christoph. Good morning, Sterling. Good morning, Anissa. All right, nothing much in terms of earnings this week. Very, very quiet. We got McCormick, Spices. We got Levi's. Hey, but nothing really. So, what am I looking for? Let's take a look. Again, this is going to be a quicker session. Something has popped up. So we did the first test of rotation zone. We have the 200 right below on the S&P. I'm watching to see so far if I put up my little key things. You see 62.5 has held so far. But that's what I'm watching for. 43, 12, 25 on a close, and that wouldn't be a 5-minute close, but that's a longer close. If we get down to 4,300 area, we might have a potential double forming up, and then we'd have a potential reversal signal also against that 200. Until then, we've made the first test of that rotation zone on the daily and rotated down. Below that, we have 42, 88, 75, and then the retest of the low areas. Now remember, right down here, especially around the 75, this 4,300, there was a lot of buying pressure back on Thursday. So keep that in mind. Cycle's still trying to climb, but this is it. Daily cycles we're trying to turn up, but so far, a very weak correction. And weekly's still not bottomed. So keep in there, and we could not hold the channel either. So I'm keeping an eye to see if we get that bigger bottoming pattern. And if we were to take out the minor levels, if we were to take out last Wednesday's lows, would be the minor levels would be about 42.53 next, and then the next major level 42.36. NASDAQ has not broken its channel yet. You can see it right here. But I still will be watching. If NASDAQ breaks, the key is right around this 50%, this 14.820 area. We start breaking below that. I'm focusing mainly on 14.764. Close below that, 14.704 and 14.645. So that's what I will be keeping an eye on in case we make that double bottom. I didn't go through the upside on the S&P. The upside on the S&P, if we don't make a double bottom territory, the key resistance is roughly right around about 43.50 to 43.60. Has to get some traction above there for anything to really start going. The NASDAQ, the traction area for me that I'm watching is about 15K. It's right around 15K. I'll see if we bounce here into the open holding this channel area and the 50%. Other than that, if we start breaking below that, I'll be focusing on the bearish side. But this 50% going into the open will be key for me. Also on the daily cycles getting to the top, and you see here, not much of a bounce. Bounce in the rotation zone and so far rotating down. Dow, very weak. Very weak, already on the 4-hour in triple bottom territory, so no potential double. I will keep an eye still on Friday's high in the Dow because a lot of people will be watching it. Other than that, next key level on the Dow was 33,300 to the downside, and to the upside, the key levels really got to sustain something above is about 33,920. Russell also breaking down from the channel. I will be also watching for, just like the S&P and the NASDAQ, the Russell. It's not closed below 62.5. You see how close it came and bounced. We had the gap open from last night. The gap's been filled. Let's see if we get like at least a 1 hour or 4 hour close below the 1795 area. The area for the double would be 1789.3, then 1783.3. Hey, good morning, Options 22. Do I see the current move as part of an Elliott wave, 5-wave weekly down pattern? Let me get back to here. A 5-wave weekly down pattern. This could be unfolding. If this breaks the bottom of this channel and keeps extending, we could be getting a 1, 2, 3, then a 4, 5. It could be unfolding. It's still at a very key area where it could just simply be a ABC type correction. So this is not yet defined well. But if we really start breaking below and extending the run, especially down to about 41.71, yes, we could be going into a larger Elliott wave, 5-wave pattern. Why do they keep running up the SPY? It's right now, it's just indicative of there's lots of selling pressure still coming in. Lots of selling pressure coming in right now. Sorry, just dealing with something real quick. So it's the pre-market hope and then dump it after. It's not been able to sustain a lot of rallies. So this is definitely, the market's become overly weak. Overall weak from buying the dip to starting to sell any strength. So we're going to have to see how long that continues. Now the VIX popping back up after a Friday's little dip. I'm keeping an eye to see if this starts reversing, gets above 1874, and then we'll have this key point back at 1583. But it's looking, if going into the open, like we could, unless we get a pretty sharp bullish reversal, it could be closing above the 62.5, which means we could have a little more upside pressure on the VIX. The DAX also rolling down. I'll be watching for a potential double here. The key level for the DAX is roughly about 15,360. So I'll be watching that to the downside if we pull back that far. The notes, after a couple day, Thursday, Friday, has come down. Did this officially hit it? Yeah, it looks like it did. 107.17. So we need 107 below 107.18.5. So we do have a potential. That does not mean it ever has a trigger, but at least we have a pattern for stops now, because this has been a very nice downwards move. So a trailing stop level, a close above 108.14.5 would be a great level for a longer term stop. Other than that, if we continue down, 107.12, 107.07, and then the major harmonics are here. The major harmonics would be about 106.23. The minor harmonics would be the reverse. And I'd be looking at 106.29. The yields also in double top territory. So you have that going on. So, but that would need a close back below 4.5. 4.5. Other than that, the key area right now on the yields for all you micro yield traders, the key level, if it breaks out, takes it to 4.75 to the upside potentially if it breaks above the high from last Thursday. 10-2, still trying to keep going with the bear steepening. We're really softening this level. Dollar index, couple day pullback, rotation back up. Let's see if this is in double top territory. I should say all these doubles are potential, so yes, it is. So now it's a great area for a longer term trader who's been trading the bullish side to potentially use it as a stop on close below 105.62 because then it could get the bigger pullback. And you see that bigger pullback could take it into the weekly rotation zone. But that has not triggered. If we break out above Wednesday's highs, 106.89, and then the next major level would be 108.84. Crude, still holding. This little key support ledge, right around 91 area. If we do break below, I'm focusing on about 88.50. Remember, crude's been on quite a tear. And then if we start breaking below 88, then I'm watching for a return to the 87. But there's a fair amount of support coming in here. So it could lead to a bigger pullback. But daily cycles are getting closer to the bottom. And weekly cycles still at the top. So, again, I'm watching watch for a pullback to see if we get more buying opportunities. Natty gas, nothing. Gold, we got the close of below the 62.5. Next target area is 1830, then 1777. Not been able to get any strength. Bounces have been very weak. So I'm really watching for a retest of this 1777 and the bottom area from last October. Let's see if we can revisit that and how it reacts right around those levels. Any bounce, I'd be watching the daily rotation zone. What else do we have here? The selling in September was pretty orderly, yes. I'm definitely watching that things could get more volatile. I'm definitely watching, especially now. Remember, September's the worst month. One of the most volatile months is at least the first 3 weeks of October. And then we can see if we're going to get a year-end rally or how long any rally can sustain. But that's why, from a hedging point of view, I do not abandon portfolio hedges at the beginning of October. I keep them rolling generally through October expiration of options. So you can investigate that for yourself, and that's something you can use throughout your trading and investing career. If you're going to hedge stuff going with September into October, I do not recommend unwinding before October expiration if you're using options. And I'll time it anyways if I'm using other stuff based off the expiration cycle. Just a little tip there. Bitcoin getting juiced right now. I'm not buying this rally just yet. You also had that stupid Michael Lewis interview on 60 Minutes last night. What a joke that was. Sorry to get sidetracked on that. Tesla, their delivery numbers came out missing, obviously gapping down. Still no close below the 62.5. Key level 237.34. And then the real key level 212.36 if that sell-off continues, because that would still trigger a massive double top. Let's get real quick to the spiders and the Qs. I know some people want those numbers, those levels. So just like with the S&P, with the strong reversal on Friday, they could not sustain it. We got the gap fill. I'm watching to see if this forms a double. That would be 424.68. Watching before that for potentially a 1 to 4 hour close below about 425. Let's see, get the exact number in here, 425.88, which interestingly enough is right around the low from Friday, 425.91. So if we retest that, I'm watching for that close below 425.88 to get that potential double. Area needs below 424.68, but we could even get down to 423.49. And if it breaks lower, here's the levels. 421.10, and then look, we got a cluster right around this 419.79 to 419.90. So those are all the key levels to the upside. The upside, it really has got to get some traction above about 428.75. Above 428.75 is key for the upside. And then the next major target area would be upwards for Friday's reversal high. To the Qs, to infinity and beyond. Coming off the really nice, we had the cluster there with the reversal as the cluster filling the gap on Friday. And now the levels for the Qs. 355.71 on a closing 4 or 1 hour basis, then 354.26 to put it in potential double territory. 352.81 is the next key level to the downside. And if it does reverse and break below that, 349.91, so roughly 350, and 348.46. All right. To the upside, you see this very strong support shelf right at the 50% retracement. Let me zoom in here. 357.16 is very key. We're trading 358 at the going into the open, so this is very key support shelf. And then I'd be watching that 355.71 if that broke. The upside first level resistance 360, and then I'd use 361.50, which is also near the gap open reversal from Friday and then Friday's high. That's really, I'm sorry I have to rush through this today. NVIDIA with the golden update still, or adding it to that list. I don't remember what list it was, but I'm watching for the next rollover play in this. I would not be chasing this higher at this point. ES just took out, thank you. We'll see if this is a very key level, not just for Friday's low, but we also, just below this, we have Thursday's low. This is getting very key in that area with that 200. But we'll see going into the open. That's going to be more telling. Thank you, everybody. Sorry it's a little rushed today. Again, if you joined a little after the open, I had something popped up I have to deal with, so I had to start it slightly earlier. We'll hopefully have some more time tomorrow morning, but keep an eye also on this dollar if it remains strong, because that could continue to put some downwards pressure on the market. And with that, I will talk to everyone later. Bye for now.